news.
Well, here on Business Edition, we like to bring you the voices of people directly involved in the stories we cover. Our Moscow correspondent Richard Galpin managed to get a brief interview with one of Russia's most powerful business leaders, the billionaire Alexander Lebedev. He has banking and newspaper interests and is perfectly placed to give us a business-eye view of what's at stake in this escalating drama. He says the only really effective way of hitting Russia would be to stop Russian businesses from being able to borrow money.
What would be the most bad for Russians is stopping of Russian companies' access to the world capital markets. That will mean that out of the 700 billion the Russian state corporation, the sovereign government, borrowed, this will be brought to be paid earlier. That will mean Russia will have to use the reserves, which is now about a bit under $500 billion US. If you eat out the reserves to change Russian state corporations, replace the Western money, you then have the ruble falling, and then the price is going up. This is, by the way, the most dangerous thing.
Financial sanctions would be the best way forward.
For that, you don't need sanctions. For that, you need reactions from investors. You don't even need...
Interesting point there being made by Alexander Lebedev. Well, we take a look at the numbers. You'll see that the Europeans have much closer trade ties with the Russians compared, of course, with the Americans, therefore much more to lose. Last year, the trading of goods between Russia and the EU totaled almost $450 billion US. As for the United States, the same sort of deal was worth nearly $40 billion. Most of what Russia sells is gas, actually, and most of what it buys is machinery. And for more on all of that, I'm joined now by Philip Uglow, who is the chief economist at financial services company MNI Indicators. Welcome to the programme. Do you think any of these sanctions are gaining traction and having an effect on Putin's position from the perspective of the EU and the US?
I don't think they've really had much of an impact so far. Travel bans really don't matter at all, to be honest. The asset freezes that have been put in place, Putin doesn't seem to have blinked an eyelid so far. The new sanctions spelled out by Obama today, a new range of sanctions, a new set of asset freezes, have really made it personal. They've put a number of sanctions on Putin's inner circle, if you like, in terms of his personal banker as well, and a bank as well that Putin's involved with. But to be honest, I don't think it's really going to have a massive impact. Also, a lot of these sanctions have been flagged in advance, and there's a question of, you know, how much money is still there in the States, or how much money have they already squirreled out of the States to somewhere else? And that's probably the same case when the EU come to do their sanctions as well. And
Putin has clearly made a very long and detailed speech about this and committed himself politically to Crimea. So what are the EU and the US looking for, given that?
I think that this is the real question. What are they looking for? And I'm not sure. I'm not sure what they're expecting Putin to do, to be honest. And I think that's what the world is waiting to see. But I don't think Putin's going to change course on the current range of sanctions. I think what Mr. Lebedev was saying there is exactly right. If the EU was to scale up sanctions to financial sanctions and cut off credit to Russian firms, that would certainly start to have an impact, and very quickly. And then if we see trade sanctions come into place, obviously that will have an impact.
So this would be the third phase in which there will be some sort of economic bite. Do you think that the EU, and it is the EU which is perhaps the kingpin here, do you think it is the position of the EU that it might be prepared to recalibrate its trade relationship with Russia?
I don't think at the moment they're prepared to do it, and I don't think they can get agreement amongst themselves to do it, to be honest. I think that's the real issue here. Everyone's got a stake. The Germans have a big stake in Russia. They've got a lot of investment in there, a lot of jobs hanging on Russia. We've got France. They've just built a warship they're trying to send to Russia. We've got the UK. It's got a lot of financial exposure to Russia as well. So I can't see them getting an agreement in the short term, not unless the situation in Ukraine gets a lot worse, and maybe it would take another invasion from Putin into the east of Ukraine, and maybe that might prompt action. But it's going to be negative all round. I mean, it's going to be negative for the EU, negative for the world economy, and particularly negative for Russia as well. I mean, we talk to 200 companies every month from Russia that are listed on the stock exchange. We haven't seen our March results yet. But certainly it's something that Russia business are very concerned about.
And this comes back to the point that was being made by Alexander Lebedev there, that the investor community is in fact probably the most powerful tool.
Absolutely. And already we're seeing a lot of damage done to Russia. What they've wanted over the past few years, they've been crying out for investment. What they've seen over the last few months is investment pouring out of the country. We've probably seen capital flows maybe of up to 40 or 50 billion flowing out of Russia.
Thank you very much indeed for joining us, Philip.